No, thank you for inviting me, actually, and I'm very happy to be with you. So maybe to introduce myself, I used to know UPEC through Christian Cazeneuve, as you may know. Christian is basically a super colleague of mine. I did some very big deals with Christian, and I'm very happy to be with you today. So my name is Sébastien Halley des Fontaines. I am in charge of origination of trade finance deals for Europe, US, and UK. So origination means going to see some clients and propose solutions. So the proposal I wanted to make with you and that I discussed with the doyen is clearly to give you some kind of case studies, some concrete cases for you to have a little bit of concrete background of what we do. That's part one. And part two, if you agree, would be to answer to some of your questions that I received from the doyen with respect to the global Société Générale policy.
Yes, that's perfect.
It's good. So we have 1 hour max, right?
Yes, yeah. And we would like, if you're okay with that, to keep 15 to 20 minutes for the discussion for part two. Is that enough?
Okay, it's okay. That's fine.
Okay.
So if you have questions on part one, feel free to do it between the, part one or at the end of part one. Everything is possible. So maybe as an introduction, green trade finance or green finance or sustainability finance is in all the newspapers, in the current global intelligence of everyone, I would say today. But on our side, we in Société Générale, we have been doing some green finance for 20 years now. The very evidence of that is that 4 years ago, we were pioneering green trade finance in Société Générale, meaning that we were the first bank to propose these green guarantees, this green letter of credit on the market. So what is green trade finance? It's typically a letter of credit or a guarantee which is used in relation to a project which have a clear positive contribution to the environment or to the social evolution. So it's not very difficult in terms of eligibility criteria. We rely very much on the EU taxonomy. The EU taxonomy, I think you know a little bit it's in front of you here. It's basically the Bible, which is redacted by the European Union, whereby there are any technical screening criteria of any relevant economic activity, be it, on mobility, on renewable energy, on infrastructure, on healthcare, on all the sectors, where, in short, it is stated how we can believe that something is green. So it can be a little bit technical in some cases because, for instance, I give you an example. A waste to power, you have your garbage, you burn it, and you produce electricity. On the one hand, it is very good to use this kind of input feedstock to produce electricity, because we are talking about the circular economy, and that makes sense in today's context. However, we know that putting some garbage and let's say getting electricity out of it has some externalities which are negative for the environment. So there is another example. We do a renewable farm in an area which is offshore, on the sea, in the Mediterranean Sea, north of, south of Marseille. And there is a specific area where pink dolphins are basically reproducing themselves. And engineers basically do some 280 pages engineering reports to evidence the fact that the vibration of the eolian turbine is going to be providing a very negative impact on the, let's say, ecosystem of these dolphins. So on the one hand, it is positive because you have some wind producing some electricity, but on the other hand, you have some deterioration, or there is a negative impact of the environment. So how do we measure this? How do we attest that on a net basis, it is green? The Bible, I would say, to make it short, is the EU taxonomy, the document you have in front of you, and it in particular demonstrate and list the DNSH criteria. Do not significantly harm, meaning that anything we do or we do not do has an effect on the planet, a positive one and a negative one. It is basically a fact. And precisely the methodology is to make sure that on a net basis, the positive is much more bigger than the negative. So it's I think I take some time to list this to you, because anything we listen today is a lot of greenwashing, image risk, and I think the fundamental element, in my opinion, is very technical, and I guess that it's also an expertise topic. For instance, in my bank, we do not agree on some of the elements of the EU taxonomy. For instance, waste to power are green in the EU taxonomy, while in my bank, they are not green. So I had a very nice deal on waste to power in the UK, and I went to see the environmental department of my bank, saying, look, I'm very happy. I have this project. It's a big deal. It's green. Let's go for it. And they told me, look, Sébastien, it is it is not that green for us, because so then they went in so many details I did not understand, and I tried to fight during 1 month on this, and at the end of the day, I did not have a go, because they were more let's say conservative than the EU taxonomy, because they are experts and they have a point of view, in terms of expertise, where they do not agree with the fact that it is green. So that's an intro, a little bit long, sorry for that, but it's just for you to understand that what we're talking about when we're talking about green can be very technical. It's not because we do a renewable farm in the seaside that it is green and that everyone is happy. We're talking about strong dimensions, state-of-the-art technologies, very complex technologies, evolving a lot, you know, with green steel, with floating platforms, with very, very deep and long studies from engineers during maybe 3 years, 4 years ahead of proposing a project. So that's the environment where we talk about green, at least in Société Générale. So the very basic sectors where we talk about green, you have them in front of you. You have renewable energy, clean transportation, waste management, as I said, sustainable water management. That is very, very key because in Sri Lanka, in Africa, in a lot of countries, the size of the cities are basically, in some cases, 10 times bigger in terms of population compared to the infrastructure for water. It is the case in Angola, for instance. The ratio is 10 times. In a Sri Lanka city, it's also 10 times. So we're really talking about basic needs for the population. For clean transportation, for instance, we're talking about, substituting locomotive, working on fuel to electricity, of course. But we're also talking about specific trains where person handicapé, injured person can easily get on the train and travel on an autonomous basis. So it is a little bit basic, but the new trains for the last 2 years are starting to adapt their infrastructure of the different wagons in order to make sure that people with I don't know the English for fauteuil roulant, sorry for that, can, how do you say it?
Wheelchair.
Yes, thank you for that. Can evolve freely in the train, for instance. Renewable energy, again, we're not talking only of wind farms, we're talking about photovoltaic. It can be photovoltaic on lakes and on the seaside. In some cases, in Asia in particular, it makes a lot of sense to have them floating, because to get a permit, it can be very long. And if you have already a permit for hydro production on a lake, you can just amend or change a little bit this permit in order to put some photovoltaic panels in addition to your hydro production permit, for instance. Air emission reduction, all this is relating to this carbon capture topics. You know this, I think, carbon captures. The idea is to get and to capture the emissions from gas flaring, for instance. When you have a refinery, a lot of carbon is being diffused in the environment, and the idea is to take this carbon from the emissions and to transform it into energy. And that creates a lot of value because otherwise, besides not going in the atmosphere, it also creates a lot of value. And this value is the more big today than the prices of oil and gas are very big. So that is a very big source of reduction of emissions. Then there is this green hydrogen, which is very recent, not technologically ready. But we see some projects for gray hydrogen, but that's the very start on it. Then we have green buildings, which is not very evident, because buildings is very bad for environment. But you have a lot of new state-of-the-art technologies to comply with some green label, right? And then you have everything which is circular economy. For instance, you use some sugarcane bagasse to produce electricity, and you get when you burn the bagasse, you get some carbon capture element in order to keep the emissions outside the atmosphere and to retransform it into energy. So just giving you a little bit of color, what is behind all these projects. It's worldwide. It can be, $5 million project in Africa in order to allow some people in a village to have electricity through batteries, or it can be $10 billion project. A wind farm project offshore in France, for instance, in Dunkerque, Noirmoutier, L'Île-Dieu. Each of them is 4 billion each. So just for you to have the size of a wind farm. Then we have social trade finance. Social trade finance is very important because the banking industry is very focused on environmental and social, on the environment. And we are very right to mention the environment, but the social, INS, RSE, responsibility, social and environmental. And we're talking about a lot of the environment, but not enough to the social. So social is going to be everything which is allowing education, professional training, access to healthcare, access to basic infrastructure, and affordable housing. The consensus is to believe that all this is in emerging markets, but it is everywhere because the education is a key priority in our view in the bank, and some people, 300 meters from where we live in Paris, for instance, do need access to education. And it is the more true for all the other elements: clean, affordable housing, basic infrastructure, etc. So that is basically a short description of what is behind green trade finance. So I took an example for a train which is related to Grand Paris Express project, where a client is awarded 2 contracts from RATP for the construction of 3.2 extension of the tramway between the current terminus at Port d'Asnières and Port Dauphine. So it's just for you to have something which is, of course, not exotic, but for which it rings bells to you. So why it is labeled clean transportation? It's really it is basically providing a decongesting road traffic in Paris, and it allows also a lot of people to go to work or to doing mobility without using a car. Same example for a Manila Metro, which is the MMSP, where the team spent a lot of time. It's a 36-kilometer new subway in Manila, and actually it's a very mass underground transport system where at the end of the day, you know, you allow a lot of people to avoid taking their car. And I don't know if you have been to Manila, but it's awful in terms of atmosphere, really. So that's a little bit for you to have the color of what can be a green project. So as I said, you know, on the right part, you have, on the left part, you have climate change mitigation criteria. So for sure, it is automatically eligible. We're talking about different solutions which are in the good direction for the climate change. However, there is still a do not significant harm criteria here, where you have in these projects to comply with all related norms, and you have to assess if doing this brings some negative effect, right? And at the end of the day, there is an evaluation, which is an expert evaluation of the net impact. And at the end of the day, we believe or not that a project is green or not, and that's some kind of view of decision by the bank. And this is where the greenwashing comes, where all the analysis can be made deeply or half deeply, or I would say lightly. And if the analysis is made lightly and someone, being a company or a bank, putting a green label without doing all the analysis, then different stakeholders, the other banks or the other companies, or typically the population, can say, look, you are saying that you are developing the green trade fund, the green label, but it's not true because the externalities are very strong. So then comes the image risk. So that's a little bit it about green. Perhaps to go through before going to the example, when you are a company, doing green is a transparency commitment. It's very important for the companies to show that you are doing all the necessary steps to demonstrate that you are working with partners such as banks who provide you some green labels. You're not obliged to do green trade finance when you are a corporate, but if you show that you do green trade finance, you send a signal to the investors. You say, look, I did some green capital markets bond issuance 3 years ago with different partners. Last year, I did a green loan market issuance. And this year, I'm tapping the trade finance market, which shows that I'm tapping all the segments of the debt and capital marketing industry doing green. So I'm not doing only a green bond on the capital markets to show to everyone that I did it, and then I do nothing else. I'm just investing some time, investing some resources internally as a corporate to to build a very ESG journey, and to show to everyone that that I'm doing this on a long-lasting basis on all the segments. So that's point one. Basically, if I am a company, I'm a corporate, if I do green trade finance, I increase the attractivity that the investors can have on me, because the investors just understand that I'm deeply investing in making sure that what I do is green. That's point one. Point two is that investor will say, look, this company is doing green, they are doing a lot of efforts, they work with so many banks on so many segments, and it's great. So our view on the risk is very good. The rating agencies who are providing some ratings, some ESG rating, will be happy. And then basically they show vis-à-vis their other competitors that they are the first one, they are the pioneers in the green trade finance market. So that's the advantage of for a company to do green, and it is also a regulatory obligation now, because in 2025 the company will have to report vis-à-vis the regulator in France the different green assets that they have in their balance sheet, and also the green debt, which is qualified as a debt. So it becomes an obligation for them to declare the green assets. Now, maybe before talking about the different commitments on the questions you have raised, I have 10 minutes to talk about a little bit the other type of instruments and maybe the case studies. So the other types of instruments is on the right part. We're talking about sustainability linked. You have a question? No?
No, sorry, thank you.
Yeah. Sustainability linked is as opposed to the two others, which are here, you see, asset-based, this small asterisk. Here you mentioned sector agnostic, meaning I am a company, I do not necessarily develop green projects. For instance, I am a company in an activity which is not necessarily related to these sectors, where the green eligibility is not very easy. So I still want to show to any stakeholders, the regulator, the bank, the finance investors, that I am committing myself vis-à-vis the environment, vis-à-vis the social element. So what am I going to do? I say, look, during the next 5 years, I commit myself as a company to reduce by X% the scope 1 carbon emissions, and by Y% the scope 2 carbon emissions. And I commit myself to reduce X and Y in 23, X and Y in 24, all this during a 3 to 5 year trajectory curve. That's one KPI, which is related to the carbon emissions, but I also have some other KPIs which are more social. For instance, the parity between men and women in senior manager positions. This is what you have on the screen. But it can also be the increase of engineers who are women in my company. It can be a lot of different KPIs which are really fundamental and which has to be real objectives. It's not that, you know, I undertake, I commit myself to do this during the 5 years, but I know that it's already done almost. The objective has to be challenging. And these objectives are, you know, they are analyzed by experts in our bank. The type of KPIs and the level of the curve are analyzed by our experts. And that's an undertaking, a commitment by the company to commit themselves to say, look, on my side, I do my best on a challenging curve to reduce my emission, to consume less water, to reach a parity between men and women, etc., etc. And if in reality, at the end of year one, the objective is reached, then there is a bonus, meaning that the company pays a little bit less money to the bank because the company did its job vis-à-vis the environment, etc. If, on the other hand, it is not reached, there is a malus. In both cases, the bonus and the malus is invested at the choice of the company in, for instance, a fund which can be for healthcare, for reforestation, or different things, which can be either planet-driven, environmental-driven, or social-driven. So that's another part of the solutions we proposed. It can be for companies a way to show to the investor space that they do something concrete, even if they are not on green product. And then the alternative is between the two, the green trade finance and the sustainability linked trade finance, can be the hybrid trade finance. Meaning, I am a company and I undertake to reduce the parity between men and women during the next 5 years, to consume less water and to reduce my emissions. If I don't do it, I will pay more to an association, a foundation, for a given positive reason. And in parallel to that, I continue to work on projects. Some of them are green, and I really focus on this one. And I have a label which is green, which is confirmed by the bank whom I am working with, and with also potentially a second party advisor, which can be a firm on top of the bank, who is also having a lot of expertise, who says, okay, the bank has confirmed that the transaction is green, and on our side, we also confirm that the transaction is green, which means second party opinion. That is to say, green is a serious topic, which means expertise, which means a lot of work, and this is why there is greenwashing in the industry, in the finance industry, because at the end of the day, nobody has the same expertise, and this brings some mismatches. So maybe I have 3 minutes before going to the Q&A. Sorry for that. Before going to the concrete cases, I wanted for you to have all this background panorama and then let's have a concrete deal here.
If you want
So,
an extra 5
yeah.
minutes, it's okay. We can add 5 minutes before the questions if you want to speak a bit more about the case studies.
Okay, thank you. So, case one, yeah, that's a big deal because it's a 12 billion deal. The company is a very big company acting in the industry. I cannot say more about it. And it has a strong willingness, this company, to show to the investor community that they are doing the much they can do to do the best for the environment and the social aspects. So the deal is a sustainability linked facility where there is 16 banks, 16 altogether, coordinated by an agent. Here is the agent of the facility, the gray square, and you have clients here on top of it, and the facility is to issue guarantees. So, in a nutshell, several banks, 16 banks, are sharing the issuance of our clients. And the issuances are guarantees in order to cover, advance performance bond, advance payment, bid bond, all these technical guarantees that you've seen in your masterclass. So the very twist of the structure here is that we have the need of someone, you see on the left, an ESG co-structurer coordinating and structuring what are, as I showed you, these KPIs. Which KPIs do we need to have for this client? And what is the curve? What is the trajectory of these KPIs for the next 5 years? And this coordinating and structuring agent is in charge of communicating basically its analysis of the best KPIs to be chosen for this company, to work on the trajectory, on the curve of KPIs, to work on the solutions for the bonus and the malus to be invested. And at the end of the day, to coordinate all that, to work on the legal documentation to make sure that it works well. And every year, no, I think it's every quarter, there is a reporting, what we call the sustainability KPIs certificate / sustainability reports provided by the company to the agent of the facility. The agent of the facility works with the ESG co-structurer, and every 3 months they say, look, this is the sustainability report of the company. KPI number 1 was bonus, KPI number 2 was malus, KPI number 3 was bonus. There is a formula. At the end of the day, the formula reaches an average bonus of X $1,000. Do you agree? Yes, you agree. Then we invest in that foundation. So that's point 1. It's very new. It was closed in November, and it's July. Sorry, and it is a very paramount facility because it's 12 billion. and we are very proud to be acting as coordinating and structuring ESG structurer. So that's example number one. And you see it's sustainability linked. Why only sustainability linked and not hybrid? Because doing the research for green eligibility for each guarantees out of the 12 billion facility, it was too big amount of work, and the company preferred to do sustainability linked. And in parallel, the green eligibility was not certain on several projects. So it would imply some kind of case-by-case study by the bank to see if it's green or not green, and it does not work because the company needs to issue some guarantees in 2 days, and if you have some engineers looking at green eligibility days and night for issuing 100,000 guarantees, it's not profitable. So this is the reason why it was sustainability linked. And that's a transition for example number 2. This one is an hybrid, meaning that it's doing green, right, with a potential green element, but it's also sustainability linked. So you have 2 ENS KPIs. That's what you mentioned here, sustainability linked pricing incentive based on 2 ENS KPIs. So environmental and social KPIs. And then it's a gradual pricing incentive with an option to put donations to specific association. And in parallel to that, on 2/3 of the issuance of guarantees, we have this green eligibility sector. Here we're talking about clean transportation. Again, sorry, it's not clean transportation. It's construction industry here, this case. And on top of the pricing, we can have a green premium. For instance, if a transaction is green, the client pays less to the bank, and this bonus is invested in donation. So at the end of the day, this bonus is not cumulative with the bonus of the sustainability links. It's one on the other, because at the end of the day, the bank would not earn any money. But it's just to show you that it can be some kind of one or the other. So I think I'm done. We have tried to be precise. We have 12 minutes or 15 minutes. Do you want to launch the Q&A?
Yes, if that's okay with you.
Sure.
Thank you so much for this presentation. First of all, does anyone have a specific question about what was just said? Yes, Shauna?
I do.
Can you hear Shauna?
Yes.
Well,
I'm going to come closer to the microphone. Is it better?
Yes, it's better.
okay. Hi, my name's Shauna. I'm part of the Sustainability and Green Business class. Thank you very much for your presentation. You mentioned the importance of the social side in trade finance, and I'd be very curious to know, how is social trade finance handled in emerging markets as opposed to places like Western Europe or in America? I'm originally from Mozambique, and it'd be quite interesting to hear a little bit more of your experiences on that front. Thank you.
Thank you for your question. No, Mozambique is very interesting case in particular. because we vary in the energy sector in the Mozambique. But I give you a concrete example in Mozambique. You know Mozambique LNG?
I do.
It's liquefied natural gas project. It's a very big project. And a lot of people, a lot of families, a lot of the population is working in relation to this project in different things. For instance, to allow the people to eat in different canteens, for the workers to work. There is a very basic economy around these projects. It's huge. Each of these projects, I think, is 6 billion. So you have 18 billion CapEx, capital expenditure program. So that's part of the energy transition. Even if it is liquefied natural gas, it's better than crude oil. So it's gray, but it's really better for the environment compared to crude oil. Now, when it comes to the social, a lot of people need access to education. A lot of people need healthcare. A lot of people need water treatment. In these areas, which basically were areas where there was nothing. It's areas offshore, and the coast. The coast is basically an extremely small village initially. Now it's a city. So everything which is behind social, meaning, as I said, access to healthcare, building hospitals, securing the payment for vaccines through export letter of credit confirmation, building hospitals through performance guarantees, advance payment guarantees. That can be also a solution. And then there is anything which is, I would say, access for different villages. That was a transaction that the bank did in Senegal to energy. For instance, electric batteries, enabling some people in a village to have access to electricity and to potentially internet, potentially to education. And that's a little bit also social.
Thank you. We had a question in the questions that we gave you ahead of time about the integrated report that you wrote. I mean, that's Société Générale wrote. And at some point in this report, they talk about the environmental transition. And it says that they have a new commitment of 300 billion euros in sustainable finance between 2022 and 2025.
Yeah.
And we wanted to know if you think personally, with your expertise, that it's a commitment that it's reachable.
What I understand is basically that we are in advance on this program, talking about the bank as it is, and we are in advance on this path. You have all the different ambitions, which is adjusted in our website. And recently, on the oil and gas, we have a commitment which is to reduce by 20% in terms of outstanding exposure within the production of oil till 25. Today we are basically above this. We are in advance on this program. It is also the case that the carbon emissions, are linked to the production of oil is to reduce by 30% by 2030. There have been recent declaration from our top management that this was clearly reached, and we were in advance on this commitment. There is this intensity carbon on the exposure for the electricity sector, which is committed to reduce at the level of 125 grams per carbon emissions per kilowatt by 2030. And we started with this. There is this coal policy where it is clearly an exit. We have for several years we have decided to leave this sector, and we are not financing a single activity related to the coal industry.
Okay, thank you so much. So you made some adjustments depending on how the projects were going. Is that correct? So you just keep monitoring the projects that you're following and the projects that you chose to make sure that you're on track or above track. That's if we understood.
In fact, it's in fact, these are more monitoring. It's really strong policies within our organization, strong guidelines, strong governance, where we have strong rules in order to stop this and to decarbonize our portfolio. So it is, a strong culture. But it's not new. We have always been doing this kind of shifting of our strategy from a carbon activity to a decarbonized activity. It's our day-to-day life to reduce something which is very carbon into a lower carbon activity. We are doing some projects every day. We have some opportunities every day. So when we have an opportunity, we assess the possibility to do it and whether it's good or bad. I give you an example. We are doing a lot of decommissioning transactions, meaning that we issue some instrument in order to uninstall the oil platforms, be it in the Baltic Sea or in the continental shelf. That's something we do a lot. So we are very driven into decarbonization.
Thank you. I think this will be our last question because we only have 3 minutes left, and I'm gonna let Rania take the floor.
So thank you for the presentation. So we've seen that you've talked about monitoring those bonds and those criteria. So recently, BNP Paribas was mise en demeure, I don't know how to say it in French, in English, due to a bad monitoring of those ambitions. And what are the tools to avoid that, to be sure that what you're saying is really what is applied and where the money goes?
So many rules, so many controls, so many IT systems, so many strong, let's say, message every day, every quarter. We report all our exposure. We need some specific authorization from different people in order to make sure that we're complying with X or Y, or we're working on this sector. And it's normal. We are basically framed into a global monitoring system, a global reporting system, a global origination system where anything that we do needs to be authorized, pre-authorized, pre-announced. We need to have non-objection to proceeds, green lights, and everything is regulated. And but that is not new. Huh? We are working this way for the last 10 years or 20 years, also on this kind of topics.
Well, thank you so much. Unfortunately, we don't have more time, so I'm gonna wrap the session up. But we will send you a little summary of what was said, and maybe some contact information if you want to have some interactions in the future. And we thank you for your time.
Thank you to you. Happy to be part of this seminar. I hope you will enjoy it further.
Thank you very much. Have a great
Good luck. Bye-bye.
Bye. Thank you.